So till the stage is set, may I introduce the next session. This is a fireside chat. The 21st Century Green Revolution, Opportunities and Challenges in Financing. For this, we have with us Ms. Shamika Ravi. She is member of Prime Minister's Economic Advisory Council. Plus, she is also part of CIEU as the founding member and part of the governing board. Shamika ji has a distinguished career as academician as well. She has been teaching at various business schools. She was earlier part of the Brookings India chapter, and now obviously she is creating a lot of disruption through the Prime Minister Economic Advisory Council's recommendations and research she is doing there. We will be joined by Jagjeet, Sareen, and Raman Agarwal. They both are part of CIU. Jagjeet leads the climate practice, and Raman leads the NBFC practice. Raman, Jagjeet, please, Shamika ji, please come forward. So the applause should be louder. Thank you, thank you. See, Jagjeet and Raman, the caution note is always there. She's part of the board, so you have to be more benign towards her.
Be gentle. Thank you so much.
Maybe I can kick us off. So that's the gravitas of our speaker, that she needs two people to grill her at the minimum. As Anilesh was introducing, she has been disruptive, but this has been very, very creative disruption in the system which PMEAC is driving, both her and Sanjeev Sanyal ji. You read their articles, their research, and you see the finesse in the analysis, but also very, very concrete recommendation and the surgical way they're trying to deregulate in a right way so that we open up our economy, we become a bit more competitive and move towards the vision of Viksit Bharat. Ma'am, first of all, it's a great privilege and honor to sitting beside you and maybe asking you some questions. Given it's a fireside chat, so we'll create a bit of a fire in our conversation, bit provocative by intention. But the idea is to inform the audience what, at the highest level, the thinking is around the green transition which we are in. I'm reminded of the first speech, I guess, Honorable PM made right after election results at the BJP headquarters. And two words, or rather 4 words, which stayed with me till today. He said, we have to push for green industrialization and green mobility. And just imagine, right after the election results, which was, in a sense, a bit disappointing from the big victory we were hoping, but still the leader has set his mind on the green transition agenda, and he's talking to his karyakartas there, but reminding them that green transition, green industrialization remains our big focus. And I was, as a climate practitioner, I was so excited to see that message coming right at the start of the third term. With that, let me ask you this, is there a conflict at the top, not at the PM, but in the bureaucracy which supports the top, about the choice we have in terms of our developmental agenda and meeting the net zero goals and remain competitive, bearing in mind that there is a cost to transition. And there is a path to go before we become green competitive, looking at our neighbor and others. So give us some perspective from your vantage point of this. Is there a fork in the road, or have we brought it together? How do we see green transition as an opportunity or impediment to our growth? Please.
So thank you, Jagmeet. This is, it's always wonderful to be back in this room, of this forum. Thank you all for making time and joining these deliberations. Let me start by saying that, one thing is very clear. For us, growth is non-negotiable. So we are not Europe. We do not have the luxury and frankly, for lack of better word, the foolhardiness to think of degrowth to achieve certain targets. Remember, this is a country that has just come out of poverty. In fact, let me tell you that as per the Rangarajan poverty line, 29.5, so almost 30% of the country was poor 12 years back. Today, that number is 3.9%. So you have achieved tremendous growth, and that growth has been inclusive on the back of the fact that economic growth has been the engine to achieving these targets. So for us, growth is non-negotiable. We have to grow. We have to do everything which culminates in high growth, after which then we can think of what are the other developmental targets. There are always trade-offs. And to students of economics, this is your guns versus butter. Defense mein kitna chahiye, education mein, health mein, R&D mein. We are a country which is growing richer. We are a society that is growing richer. But another very clear vision is that we are not going to grow the way the past OECD nations have grown. Because that would be terribly irresponsible for a nation of 1.4 billion to grow in the same way that these past nations have grown. And that is where you also have to understand what are the larger climate objectives. Why do we talk of green transition? Why are we even talking of mission life, which is about personalizing this larger objective? How do you make day-to-day living, day-to-day running of institutions? It encompasses almost every sector of the economy with the objective that you do things which are sustainable. But when you say, is there a trade-off? As an economist, let me be very honest and tell you, of course there's a trade-off, Jagjeet. The point is in terms of having clarity in policy to minimize the frictions. Because this is too large and diverse a nation to then say that we are going to steer away from the friction. Government of India is also a very large entity. It is one part of the larger economy which is driving a lot of these initiatives or guiding, that is perhaps the right appropriate word, but it is one. The private sector, the kind of innovations is another. Our trade relations, technology transfer, the kind of things we are attempting is a third factor, and under tremendous tumult. But in sewing this large sort of blanket together, we are very clear we will need to continue growing. And the second is we cannot grow the way these past nations have. Therefore, green transition is a very central piece of what Vikasit Bharat has to be. So in terms of priority, we recognize that the costs are there, but it is a priority. And it has to now get translated into every aspect of policy making. So believe in terms of that is one constraint that we have basically imposed upon ourselves, very willingly so, because we are global. We also want the nature of growth for us to be sustainable. And it has to be one where, India in net is not a contributor over the medium run, but actively a solution to what is today a global problem.
Thank you very much for clarifying that, and that we are not creating a false choice here. We are prioritizing. It remains a top priority, but developmental gains have to be secured in tandem. It's not either or, but the OECD model is not going to work. Coming from the World Bank, where I used to work before, we used to say Nordics had decoupled, why can't big economies do? But that's again is a false example, I would say. The scales and the numbers and the priorities are very, very different. So let me take one question more, and then I'll pass it on to Raman for his questions. For the green transition, and since morning we've been talking, we need trillions, if not at least hundreds of billions of dollars. We are, in a sense, resource scarce country. We still need a lot of money to come in. Is there a view on how we mobilize our domestic savings, domestic capital, vis-a-vis bringing money from outside? All kind of money coming from outside. So if you could give your view there.
We do know that we need money from all sources, Jagmeet. We are very pragmatic when it comes to the objective that we are trying to fulfill here. But we also know that there are several elements, there are several aspects of this green transition, which in the long run, just given the difference between pledge and actual cash, we can talk about global money and capital flow, but a lot of those pledges have remained pledges. So we do know that despite the past commitments, eventually what will propel us and help us achieve our targets is also mobilizing our own domestic savings in a way which balances both these twin objectives, right? And let me tell you, this is something quite underappreciated, that a lot of this innovation or thinking is not happening in Delhi. In fact, it's at the state level. How many of you know that one of our poorest states, Madhya Pradesh, actually is doing a measure of green cover? Biodiversity is a little more tricky, but a green cover of all the districts, with the intent that you can index it. You see, not all your states are going to play the GDP game the same way. They're not all going to industrialize the same way. They're not going to be able to do services the same way. Agriculture is there, but agriculture also has limited revenue for state, please remember. So channeling resources for these kind of states means putting a value to what you have. What MP today has is biodiversity and green cover. Do we value it? Yes. If we value it, then can we index it? Can we design instruments which can then be actively traded? But you see, that groundwork has to be done. And it is a public good, which means the local state has to do it. Similar efforts are being made in Meghalaya, right? Similar effort is also being, to some extent, being tried in Andhra. There are a lot of such things happening from a policy perspective, which is in the realm of, I think, trial and error, but we do know that this is of value. The concept again of green GDP. We are trying to measure and bring to the table highly localized information, which can then help us even mobilize a lot of these resources which are being pledged for in the name of green finance, of a green transition. But how exactly are you going to deploy them? That requires these nuts and bolts, these details from the ground up, right? So, you know, to industry, sometimes it might seem like we're not moving fast enough. There isn't enough resource. But when I see in net the efforts which are being made, and domestically being made, also having the capability to then be able to even assess, you know, the riskiness of certain investments, the climate risk. A lot of this is highly, highly localized. That's why, in fact, in this realm, we often talk of what is precision policy making now. Ye national level pe aggregate numbers leke designing policy, nahi, that is all passé now. In fact, it's not even at the state level. States are now trying to go down to districts and tell us, well, this is the value of what we have. Remember, we might be the only, perhaps the second country after Canada, which has an institution called Social Stock Exchange, which was set up with the premise and the objective, is still very nascent, that these kind of instruments can then be designed. That we can actually then think. So when you're thinking of capital, getting that capital is one part of the problem, right? And that is not insurmountable for an economy which is growing this fast. You can even mobilize global capital. How are you going to deploy them is the next phase of this problem. And that requires a lot of nuts and bolts and a lot of, you know, work on the ground. Considerable effort is being made there. So, yeah.
Thank you. I think, as you very well articulated and said, and it's equally more credible that yes, we are not only working towards a Viksit Bharat, we are working towards a Viksit Green Bharat. And I think that is the real challenge and the opportunities lie. Ma'am, I quickly bring down to certain micro level things. And as you said, we have to look at that. We make it more granular. I come from a sector which has always stepped ahead when it comes to taking that extra mile of risk. The risk appetite shown by the NBFC sector has been well known, to be known. And as a result, today NBFCs have taken lead in funding green assets, right? So whether it's electric vehicles or whether it's solar rooftops, they are in fact ahead of the banks today. The challenges we face is, of course, one which has been anyway a challenge for the NBFC sector is how to source that funds. Now, to do this, because the one we need to appreciate, the risks are different. It's a new animal. Many things are unknown. As they say, risk of the unknown is far greater than whatever is known to you. We don't know what's going to be the residual value tomorrow. EV is going to be literally scrapped maybe. So that's a big challenge itself. So the support, we need regulatory, or I would say a policy support or incentivize on two fronts, we think, and I would seek your guidance and views on that. One, as I said, about the funds. There is a talk of a new finance institution to be set up. We've been constantly asking for some kind of refinance mechanism. So where do you think can this dynamics ultimately rest with? Number two is certain changes to be made at the policy levels. And I think during the internal discussions we were having, I just pointed out to you one very classic example which has come to our limelight. And some of my fellow financiers are sitting here. When we finance EV electric vehicles, battery, which is the heart and soul of the electric vehicle, we've come across cases when the borrower defaults, so he just goes and sells off the battery in the market and puts a local battery. So you are literally left with the scrap. Now, how to protect that interest? So a simple way could be that we suggested there is a need to amend the motor vehicle rules and have that battery number included in the RC instead of the engine number. So these are minor level tweaks to be done at the policy and the rules levels. So I would suggest to guide us on this, how can we go further on that?
On the financing side, Ramanji, I think I am of the view, but I think given the current situation and particularly push for green transition, we have to go back to the past discussion we used to have on the nature of regulation of NBFCs versus the banks. I think there is a case to be made, and perhaps this is the opportune time, that NBFCs are a different ball game. They perform a very core function, which the banks cannot. And by virtue of performing a very distinct function, of the kind of risks they take, the kind of financing they provide to the kind of borrowers that they do, and under the conditions that they do, RBI has to look at these two separately. And this case, I think, has to be made repeatedly, and we have to prevail, because otherwise it's too costly. That is number one. Number two, when the public sector banks were set up, many development banks were set up 40, 50 years back. Each of them was set up with a very definite objective. आप agriculture financing करेंगे, आप SME के लिए करेंगे, you will do for this kind of industrialization. What has happened over time, that the differentiation has gone. Everybody is now a clone of the other. All development finance institutions have banks in particular. They're all beginning to do the same thing. But this area that you're talking about, which is green technology, green finance, new risks, we have an EV mission. We're trying, and then there is a talk, as you are saying, कि हो सकता है scrap हो जाए, क्योंकि नई technology है, there are new risks, and so given that this is the reality of new tech, that it is so fast moving, we need dedicated institutions. Right? This is a specific market segment. This is going back to 50 years back, the intent with certain institute. We need an institution to do this kind of risk-taking, focused on this segment of the market. I actually support this. Now, as far as the larger insurance, there are many other, right? Financing is not just from this credit side. When you think of making the financial sector conducive to this kind of risk-taking, insurance is a very large part of it as well. All of that area remains, we have had tremendous gains, by the way. It is just that the reality and our ambitions are also racing ahead so much that at times if we betray a note of frustration, it is also because we are trying to achieve something which, quite frankly, no country has managed to do, including China, while playing by the rules of the game and being part of a larger rule-based global order, whatever that order might be, but we still abide by, and we are therefore part of a system where rules matter. So we cannot have the kind of technology transition, the kind of technology transfers which China has had, or you have had certain other countries also in the past. We are trying to grow while remaining completely independent. We are trying to grow while also taking into account developmental targets and green. Right? So there are multiple objectives. There are trade-offs, which means there are costs that they impose on the other. But for a large democracy and such a large part of global population to attempt this, I think it would be terribly irresponsible and naive to believe that we should be doing one at the expense of the other. ये तो सब करना पड़ेगा.
And I think quickly you've partially answered it. In fact, I think you've hit the nail on the head when you said, and that was my second part, on the regulatory front. Because on one hand, we see RBI talking of harmonizing the regulations for banks and NBFCs, which, as you rightly said, to itself poses a different challenge to us. And we feel the kind of risk profile we cater to, maybe there is a case here to create that kind of a level of distinction. Now, I would say, okay, let's not talk about the harmonization or disharmonization. If I may cite examples, a few years back, there was a class of NBFCs which were called as asset financing NBFCs. And in the regulatory framework, there were certain additional benefits given to this class because we were responsible for creating quote unquote economically productive assets, whether it's vehicles, whether it's machinery, equipment, etc., etc. The incentives could be in terms of additional leeway or additional limits when it came to bank borrowing, additional limits for deposit acceptance for the ones who were accepting deposits, and a certain benefits in risk weights or credit concentration norms. So something similar, all that has been taken away, right? It's not there now. Something similar, now if we are to getting into this kind of new funding, can there be a room for creating some kind of such distinctions in the regulatory framework?
I think we should definitely have that conversation, Ramanji, right? Ki making a case for, first of all, differentiated approach to regulation itself, right? That is what we are saying. One is to have differentiated institutions. But even the regulatory framework has to be differentiated, just given the nature of it. Now, उसमें कई चीजें हैं, right? At the end of the day, the regulator has to also balance because not all NBFCs are also identical. There's a whole spectrum. So उसमें what are the features? Who should, first of all, deposit taking होना चाहिए नहीं होना चाहिए? These are massive regulatory issues to consider, but they are also matters that must be determined not on theory. These are matters which must be determined on careful empirics of what the experience has been. The presumption that non-collateralized है तो सब चोर है, that's not true. After all, Mudra and all these the smallest borrowers have the highest repayment. So ये सब ना, these are things that must be informed through careful scientific approach to the matter. फिर regulation is as much art as science also. Yeah. And we must give credit where credit is due. Of course, now with relaxing inflation, etc., I mean, the pressures on RBI itself has come down. It's a good time to talk about these issues. So I would, in fact, encourage Ashwini ji that perhaps CIUSA on something that we have heard Ramanji talk about for now several years, we have to now elevate the pitch.
Thank you. Back to you.
This was fascinating conversation. So going back to this green transition, and thanks to support from you and colleagues like you, we got the National Manufacturing Mission announced, and big part of that is a focus on clean tech. And again, Ashwini ji also led the charge there. At this forum only, we got the platform launched by Piyush ji. A big component there is our cost competitiveness vis-a-vis the imports we are doing. And the policy levers which we have seen in the past few years, which have brought dividends, is the PLI scheme in various forms, whether it's PM Drive, PLI and others and others. In talking to various corporates who have benefited or not, there is a sense that if you want to go up the supply chain curve, up the value addition, you need to shift to inputs-based subsidization, reducing the cost of electricity, reducing the cost of capital, bringing the skill set, rather than backloading all the incentive, which which serve the purpose, but now this will become really competitive. And in this era of tariff wars and big excess capacity, which would be dumped somewhere, we are up against real hard competitive forces. So I just wanted to get your views in terms of what is the right toolkit to incentivize. If you take clean tech as a broad sector, at least 6, 7 line ministries are engaged. What is your view on incentivizing the clean tech component manufacturing in India?
You have to see this, Jagmeet, within the larger framework of where we are. We are a late industrializing nation. Yes. And by virtue of being late industrializing nations, there are certain costs that are stacked against us, and we have to be very pragmatic about it. In today's day and age, you cannot talk of trade policy without simultaneously also talking of industrial policy. They are not separate anymore. So, if we cannot now only be solving a trade puzzle thrown at us, while completely overlooking the fact that industrial policy is what is going to give you the credibility and the means to enforce any of this. Okay? And every country seems to be doing the same. The reality is that in the last 10 years, if you look at the global trade alert data, all the top 10 economies of the world have become very protectionist. Trump has just made it loud. All the top 10 economies have become very, very protectionist. The US has brought in close to 10,000 protectionist measures in the last 10 years. They are not tariff, that is why you don't know about it. China has brought in close to 7,500. They are not tariff, that is why we know about it, but we can't really quantify many of it. Our instrument of choice, having brought in piddly 1,800 regulations, has been tariff. Tariffs are visible, tariffs are therefore lead to all kinds of conflicts and escalations. So that instrument of choice for providing the protection to industry, everybody is exercising. We will now have to shift away from tariffs. So what Trump has opened this Pandora's box for us is also an opportunity. But it means a strategic realignment of the way we view trade and industrial policy. So we'll have to move away from tariffs towards domestic subsidies, exactly the type you are talking about.
Glad to hear that.
We have to do it. One of the reasons being the incentive to innovate, the incentive to be dynamically efficient, to have better product, will not come by erecting walls around ourselves. It is by supporting our industry. Right? We'll have to, there is no running away from competition, that we'll have to do. That our domestic economy is a strategic asset does not mean that consumers continue to cross-subsidize, right? So R&D spending, improvement in the quality of the product itself, new technology is not going to happen without R&D. And yes, government is a large part of it. It should be a larger part of it, but private sector also has an objective. And nobody, you're all smart people engaged with business in some way. No one does anything till you are forced or there is an incentive. Yeah, goodwill and all is fine, but economies are not run on goodwill, right? So policies therefore have to reflect this. Now the domestic subsidies, and I'm broadly calling it subsidies, but the support will exactly have to come in the nature of the things you're talking about. But that means a lot of hard work also.
Indeed. Indeed. And then you couple with ease of doing business, various regulatory reforms and labor reforms and all the rest. Raman, do you want to ask the last question?
Just one quick question, ma'am. There's another hidden animal and that is something still we don't know. RBI floated a draft paper about the climate change risk which the financial institutions already carry in their balance sheets. Now that is something totally unknown, and my fear is that, especially if I'm talking about the NBFC sector, the kind of small companies with a very limited capital resources available, this may become a major challenge going ahead. How do you see what could be, the mitigating factors towards this kind of a challenge post on the balance sheets?
First of all, I have to look at that to assess how serious, what is the level of seriousness, right? There are white papers and white papers, that is number one. But the other is, there are several elements of ESG, Ramanji, जो पिछले 10-12 सालों में which had gained a certain prominence, which are gradually getting eroded globally also. And this is going back, Jagmeet, that we want the green transition, but the right kind of green transition. Not the things that sound nice, but it's equally dirty, you know, right? So I think when what you're referring to, I hope you understand what I'm saying, that ऐसे blatant नहीं होता है, ये सब nuance का matter है, and it has to be empirically founded. So I think I take your point, but I do think that we need a lot more work before you will see the implementation of something like this for NBFC.
I think that's very heartening to hear, frankly speaking.
I think we have 2 more minutes, so I won't let this pass without asking you one final question. And that's more on the impacts of climate change, the hazards, which are going to hit from ag to all other sectors of economy, including hard infrastructure. And at least over the last 2 National Economic Survey, there's been special focus on adaptation and resilience. Can you give us your perspective also in terms of policy making and the allocations to various line ministries, which are more social sector oriented, ag, health, water, wash? What is the view of internalizing the climate risk and the co-benefit opportunities as well, if you could give us some perspective?
But Jagmeet, you have to look beyond the social sector ministries, right? In fact, if you notice this budget, there was an inordinate amount of focus on urban planning.
Absolutely.
And that is the core of it. It's not health in isolation or anything else in isolation. This country has grown organically on its own. If I ask you how urban is India, your reflex answer will be 37, 40. If you are extremely, well-read in terms of latest data, you're going to go as high as 50. But all your satellite imagery, in fact, almost all modern forms of data is telling you India is anywhere between 65 and 70% urban. That is the rate of urbanization that is happening. But on paper, they are still villages. Meaning there is a panchayat there. Meaning urban local body nahi hai. Meaning aapke urban infrastructure which makes a city, and therefore the kind of issues that you're talking about that should be considered in governance and administration, in financial tools. So we are trying to handle this at the very core. Urban planning is to become the next phase of infrastructure push in this country. I think our intercity connections, the highways, the railway, I mean, we have done a lot of that in the last 10 years. Logistically, in terms of transport, and all kinds, right, including ports, etc. All your measures of efficiency are telling you that you've done well. We've done phenomenally well on that count. That marginal highway, that marginal airport is not going to be an efficiency booster. It's the city level infrastructure of cities, which is going to determine the next productivity push for the economy as a whole. And इसमें एक बहुत core element है resilience का. You've had flooding in the cities because of the way we indiscriminately have built, etc. Resilience is to become, in fact, it's like having a chief resilience officer. And by the way, Surat has a chief resilience officer. The beauty of doing policy making in India is that आपको बहुत दूर नहीं देखना पड़ता है. You don't have to go to Copenhagen, and to many of your problems that exist, solutions also exist in this mammoth country of ours. But I think policy makers have to be told कि भाई ये है. So announcement has happened. Now the next phase is that exactly how it's going to be executed is what is happening. So I think we are trying to handle it from the very core rather than line item ministries.
This is very insightful, and I think creating an institutional framework by which it's handled across the board rather than line ministry is the way to go. No, thank you very much. So colleagues, this has been super fascinating and insightful conversation I had in, I would say, many months. Thank you very much. And let's give her a thunderous applause.
Thank you, ma'am.
Thank you, Jagjeet. Thank you, Ramanji, for steering the conversation. Thank you, Shamika ji, for taking your time out and giving us a very insightful conversation. May I request Mrs. Lekhi if you can come forward and help us in, paying our gratitude to Ms. Ravi. Thank you very much. Ladies and gentlemen, we are taking our lunch break now. The lunch is served in the next room. And my request is that we will be coming back very quickly because we are running short on time. And there are some online panelists who are waiting in different geographies who will also be joining. So we'll have to make up for the time. Thank you very much. See you in a bit.